Welcome to the FinGlimpse podcast, where we analyze the world of business, finance, and the economy. We cover the latest market news, economic trends, and some interesting businesses. As a standard disclaimer, this podcast is for informational purposes only and should not be considered investment advice. Always do your own research. Now, let's get started.
Welcome to the deep dive.
Great to be here.
We've got quite a document in front of us today, excerpts from the red herring prospectus for Oswal Pumps Limited.
That's right. And our job really is to unpack this RHP together.
Yeah, help you, the listener, understand the key takeaways, the company, its business, the markets it's in, financials, risks, and of course, the IPO details.
Exactly. We want to pull out the most important bits from this source.
And we absolutely have to start with what an RHP is. It's for an IPO, and it comes with big warnings right up front.
It does. The document itself says investing involves risk. You could even lose everything.
And crucially, it points out that SEBI, the regulator in India, hasn't recommended or approved anything here.
Nope. It's squarely on the investor to look into it themselves. It really sets the tone for the detail and the caution needed.
A necessary starting point. Okay, so the company itself, Oswal Pumps Limited, what's their main thing, according to the RHP?
Well, their core business is manufacturing pumps and electric motors. That's the foundation.
But they're not just sticking to that, are they? The sources mention a pretty big expansion into solar modules.
Through a wholly owned subsidiary, Oswal Solar Structure Private Limited. It's pretty new, actually, set up in January 2022.
And in that solar space, how do they position themselves?
They call themselves an EPC player. Engineering, procurement, construction.
Meaning they handle the whole process?
Pretty much.
Yeah.
Manufacturing the PV modules, the cables, controllers, right through to installation. They even have an associate company, also Solar Solution, that makes things like mounting structures for these solar pump systems.
Okay, and this ties into something really interesting mentioned, their role in a big government scheme.
Yes, the PM Kusum Scheme for agricultural solar pumps. The RHP highlights they're one of the largest suppliers under this scheme.
Largest. Do they give a number?
They do. As of December 31st, 2024, they accounted for around 38% of the ground-level pumps installed under PM Kusum.
Wow, okay. That's a substantial piece of that specific market.
Definitely. And where are they doing all this manufacturing? Both pumps and solar.
It seems geographically concentrated. It's all in Karnal, Haryana, in India.
And the RHP flags that concentration as a potential risk, vulnerability to local issues.
Makes sense. Operationally, anything else stand out?
They mention backward integration, making more components themselves. Also, using electronics in their controllers for things like remote operation.
More modern features.
Right. And they've got ISO certifications for the pump side of things. They also provide some capacity utilization figures.
Like?
For the 9 months ending December 24, stainless steel pumps were at about 75% capacity. Cast iron pumps more like 47%. Gives you a rough idea.
And a quick history note, started in 2003 with Basic Pumps, diversified, changed their name in 2006.
Exactly. So a history in pumps, but now pushing hard into solar.
Which leads us nicely into the markets. Pumps and solar. What's the RHP saying about the size of these playgrounds?
Well, the global pump market, specifically centrifugal pumps, is huge. Over 3 trillion rupees in 2024, projected to grow steadily, driven by water treatment, infrastructure, the usual suspects.
And specifically in India.
The focus in the RHP is on multi-stage pumps. Market size around 135 billion rupees now, but projected to grow much faster, like 16.6% CAGR, hitting nearly 300 billion by FY30.
Because pumps are just essential everywhere, right? Farming, industry, water supply.
Absolutely.
Oh.
Then there's the solar market in India, which is just massive in terms of ambition.
You mean the national targets?
Yeah. 500 gigawatts non-fossil fuel by 2030. With solar being a huge chunk of that, aiming for 392 gigawatts.
And the government's pushing it hard.
Totally. You've got the PLI scheme for manufacturing, PM Kusum, which we talked about, and PM CAGR for rooftop solar.
Rooftop solar itself is a big market globally, too.
Oh, yeah. Growing fast. And in India, expected to see strong growth, too, helped by subsidies, tax breaks, green awareness, falling costs.
So how does this all tie back to Oswal's opportunity as presented in the RHP?
Well, the RHP points to the huge potential in Indian agriculture. Yeah. Lots of farmers still using diesel pumps or without reliable power. There's a massive potential market for solar pumps where Oswal has that strong PM Kusum presence.
Plus the replacement market for existing pumps.
Exactly. Another big opportunity, they note.
But it's not like they have these markets to themselves. What about competition?
The RHP lists the usual competitive factors: tech, price, quality delivery engineering muscle. And it names some big listed competitors.
Like Kirloskar.
Kirloskar, Shakti Pumps, CRI Pumps, WPIL, KSB Pumps, Roto Pumps. Sets the scene.
Okay, let's shift gears to the financials. The RHP provides consolidated numbers, right?
Yes. Restated consolidated financial information. It covers the 9 months up to December 31, 2024, and the 3 prior full fiscal years, 24, 23, and 22.
And what's the big picture trend from those numbers?
Significant growth. Both revenue from operations and profit before tax show a really strong upward curve from fiscal 22 to 24.
And that continued into the first 9 months of this current fiscal year.
Yes, the growth momentum appears to have continued based on the figures provided for that period.
Does the RHP give context on costs during this growth?
It does. It talks about changes in material costs, purchase of stock and trade, employee expenses, other costs like marketing, and it generally tries to relate these changes to the revenue increases.
So costs rising, but perhaps in line with more business.
That seems to be the implication for some cost lines, yeah. Though employee costs had some fluctuation.
And the RHP includes KPIs, key performance indicators.
Right. And importantly, it compares Oswal's KPIs against those listed peers we mentioned earlier.
So you can see metrics like EBITDA margin, PAT margin, return on net worth.
Exactly. Net debt to EBITDA, cash conversion cycle.
Yeah.
All laid out side by side for comparison over various periods. It's how they present their relative performance.
Any red flags or points of note in the financials section?
Well, one thing mentioned is cash flow from operations. While positive in prior years, the RHP shows a net outflow from operating activities for the 9 months ending December 31, 2024.
Okay, that's something an investor would definitely want to understand the reasons behind.
Yeah, absolutely. And they also make a claim based on a report cited in the RHP.
The One Lattice report.
Yeah. They claim to be the fastest-growing vertically integrated solar pump manufacturer in India, based on revenue CAGR between FY22 and FY24, over 45%.
That sounds impressive.
It's a high growth rate.
Mm-hmm.
But, when looking at that, you'd also want to see the starting base in FY22. High percentage growth can sometimes come off a small base. And how do the absolute revenue figures compare to the bigger players? That context is helpful.
Good point, which naturally brings us to the risks. We started with the disclaimer, but the RHP gets very specific, right?
Oh, yes. This section details the potential pitfalls tied specifically to Oswal's business and the IPO itself.
Like their reliance on agriculture.
That's a major one. Given their big exposure via PM Kusum, any slump in the agricultural sector could hit them hard.
And what about the solar manufacturing side, being relatively new for them?
That's highlighted too. Limited experience there. Risks include management focus getting stretched, challenges hiring or keeping skilled solar staff, and importantly, reliably sourcing quality solar cells.
Those are key components.
Absolutely. They also mention risks around their planned capacity expansion, potential delays, costs running higher than expected.
And challenges just executing the whole solar strategy.
Right. Things like fluctuating demand, tough competition, potential regulatory shifts, managing distributors, and specifically that orders for their turnkey solar systems aren't guaranteed. They can be changed, canceled, delayed.
What about customer or geographic dependence?
Also listed, they export to 22 countries, but rely significantly on a few. Problems in those key export markets or broader geopolitical issues disrupting supply chains are definite risks.
Other operational stuff. Reliance on third-party transport, potential factory shutdowns.
Yep, those are in there. Plus the risk of not being able to retain key personnel, including senior management.
Product liability risk too, I assume.
Standard for manufacturing, yes. And the RHP notes their insurance might not be enough to cover every possible loss.
Unforeseen events, changes in foreign laws.
All mentioned. And a key internal risk. The challenge of building and maintaining really robust internal controls and compliance systems as the company grows.
And they don't ignore the bigger picture either, global instability affecting India.
No, that's included as well.
From an investor perspective, what about dividends?
The RHP is clear. No dividends paid for the 9 months ending December 24, and no guarantee they'll pay any in the future. Plus, potential Indian taxes for investors on selling shares or getting dividends.
Any specific hurdles for foreign investors?
Mentions RBI approval needs and foreign exchange rules for share transfers.
Okay, and this one seems important regarding the IPO itself, how they plan to use the money raised.
Right. The RHP states the proposed use of the net proceeds hasn't been appraised by a bank or financial institution.
It relies on a chartered engineer's report.
Yes, based on information quotes provided by the company. So there's a risk of delays or cost overruns in using that capital. And changing how they use the funds would need shareholder approval.
That's a pretty thorough list of potential headwinds presented in the document. Let's move to the offer itself. Key dates.
Okay, so the RHP states, anchor investor bidding was June 12, 2025. The main offer opens Friday, June 13th, and closes Tuesday, June 17th, 2025.
And the registrar handling the paperwork.
MUFG in Time India Private Limited.
Why are they doing the IPO? What's the stated purpose?
Two main reasons listed. One, to raise fresh capital, the objects of the offer. Two, to allow an existing promoter shareholder to sell some shares, the offer for sale.
And those objects of the offer using the new money?
Primarily for buying certain equipment and repaying some loans both for the main company and the solar subsidiary, Oswal Solar. Any leftover funds are for general corporate purposes.
And the money for Oswal Solar goes in as equity?
Yes, via an equity subscription into the subsidiary, according to the RHP.
How is the actual price per share decided?
It's not fixed in the RHP. It'll be determined later through the book building process based on demand in consultation with the book running lead managers.
And how do people apply?
Using the standard ASBA process application money blocked in your bank account. Retail investors can also use the UPI payment route via approved apps and banks. The RHP notes, though, that if a UPI transaction fails, the liability lies with NPCI, the Payments Corporation.
Are there restrictions on who can bid or how?
Yes, some specifics. Foreign portfolio investors, for instance, have limits. Their bids can't exceed 10% of the post-offer capital. Certain institutions, like big NBFCs or pension funds, need to submit extra documents like audited financials or net worth certificates.
And some people can't bid in certain categories.
Right. Promoters, related parties, associates of the lead managers, they can't apply as anchor investors.
But if a big institution bids as an anchor and in the main QIB portion...
That's okay. The RHP says those aren't considered multiple bids.
Is there a minimum number of investors needed for the allocation to happen?
Yes. The document mentions a requirement of at least 1,000 successful allottees.
And timelines for getting shares or refunds?
Within the prescribed time, otherwise they have to pay interest. Standard procedure.
The RHP also covers basic shareholder rights, yeah.
Things like right to dividends if declared, voting rights, ability to transfer shares based on law, and the company's articles of association. It mentions rules on transfers and the company potentially having a lien on shares. Share buybacks are also mentioned as possible with shareholder approval.
Okay, shifting to governance. Who's running this show? Any key people mentioned?
It identifies key management personnel like the company secretary and general managers as permanent employees. It gives details on Vivek Gupta, the chairman and MD, and Amulya Gupta, a whole-time director. Some compensation info is included for one of them for FY25.
What about board oversight? Committees?
Yes, it highlights an audit committee with powers to investigate financials, review audits, etc.
And a risk management committee?
Yes, relatively new, formed in September 2024. Includes promoter directors and an independent director.
And its job is?
To formulate risk policy, identify all sorts of risks, financial, operational, ESG, cybersecurity, and define how the company plans to mitigate them and maintain controls.
Does the RHP mention dealings with related parties?
It does. Standard disclosure under accounting rules. It summarizes transactions with entities like Oswal Green Industries, Oswal Solar, and individual promoters.
And general compliance, adhering to rules.
Notes compliance with SEBI IPO regulations, Companies Act. Also mentions industry-specific rules coming up, like for solar components later in 2025, and references labor laws, data protection, foreign exchange rules.
What about legal issues? Any lawsuits mentioned?
It lists litigation filed by the company, mostly debt recovery or tax stuff. But it explicitly states no current actions by regulators against directors and no material civil suits against or by directors as of the RHP date.
But there are potential liabilities.
Yes. Contingent liabilities are mentioned, mainly for potential GST and labor law issues.
Got it. Lastly, the RHP touches on the accounting framework.
Right. Explains some key accounting policies they follow.
Like how they book revenue.
Based on contracts with customers. How they value inventory, lower of cost, or net realizable value, weighted average method. How they treat borrowing costs, capitalize them if they relate to building assets.
Employee benefits.
Distinguishes between defined contribution plans and defined benefit plans like gratuity. Covers lease accounting, too, the right-of-use assets and liabilities.
Provisions versus contingent liabilities.
Explains when they recognize a provision versus when they just disclose a contingent liability.
And how they report segments.
By product service and geographically by customer location.
Were there any big changes when they adopted the current Indian accounting standards, Ind AS?
Yes, the RHP highlights a couple of adjustments made during that transition. One was recognizing potential losses on receivables using an expected credit loss model. Another was setting aside funds, or accruals, for warranty provisions. The RHP notes these adjustments impacted their reported equity and profit in prior periods, so it's important context for the historical numbers.
What's their stated goal for managing capital?
To maintain an efficient structure, healthy ratios, stay going concern, maximize shareholder value, and basically keep funding costs down. Standard objectives. And finally, foreign exchange risk, mainly U.S. dollar exposure.
Seems so. Their stated approach is managing short-term fluctuations by using spot rates.
And crucially, the RHP says they do not use derivative instruments like futures or options for hedging this currency risk.
Okay. Wow, we've really walked through a lot of information packed into those RHP excerpts.
We have, from the core pump business and the big solar push, through market context, the financials, the very detailed risks.
The specifics of the IPO itself, governance, compliance, accounting.
Yeah.
It's a dense document.
It absolutely is. And remember, our goal here was to pull out and explain what's presented in this specific source, the RHP, to give you that comprehensive overview from the company's perspective.
So as we wrap up, here's something to think about connecting these threads. The RHP presents Oswal pumps with this seemingly strong position in a key growth area, those solar agricultural pumps under PM Kusum.
Right. A quantified market share in a government-backed segment.
That's balanced against all those risks the RHP itself lays out. Their limited experience in actual solar manufacturing, their heavy reliance on the ups and downs of the agricultural sector.
Exactly. How might those competing forces, the big opportunity versus the execution and dependency risks, how might they shape where the company goes from here and what this IPO opportunity, as described in the RHP, really looks like?
Definitely something to mull over as you consider the sources yourself.
That's all for this episode of the FinGlimpse podcast. If you found our discussion insightful, please consider subscribing and leaving a review. We'd love to hear your thoughts and suggestions for future topics. Until next time, stay informed and make smart decisions. Goodbye.